Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is August 26, 2016 there. Sorry about that. I'm looking at the markets and trying to do a live broadcast here at the same time, so might sound like I'm a little bit distracted, but I'm really not. I just had to check something out there on the charts. But let's go ahead and pull up the S&P 500. We've had a lot happen today. Janet Yellen, Jackson Hole, she made some comments that made people believe that, not initially at least, initially the market shot straight up. And then after Goldman Sachs came out, and then you had Fisher, one of the Fed govs, came out and said that 2 rate hikes in 2016 is very possible and should happen. And then all of a sudden the market just completely pukes all over itself and sells off all the way from 2187 or 2188 all the way down to 2163. So about a 23, 24 point sell off there. And since then the market has bounced a little bit, the S&P is about 6 points off of its lows on the day. With what we've seen from the stock market over the last 7, 8 years, it would have surprised me, honestly, if we were trading at new all-time highs today. I say that a bit facetiously, but these V-shaped bounces can just be absolutely insane and mind-boggling. So I came into the day with 2 longs, 2 shorts, short IBM and also short McDonald's. And then, so let me pull up those charts there. Short McDonald's looks pretty good. As you can see, you got a definite breakdown happening here. You have like a major head and shoulders pattern, with this being the left shoulder of the head, followed by the right shoulder. And then you have the clear breakdown of the neckline. So trading below 116 and 115 area, now down into the 114s. That's a positive development for the short trade that I have on this stock here. And then you got IBM, which skyrocketed early on, but now it's just break even. I would like to see this one come back down to like the 154, 155 area before I book gains. Right now on IBM, and it's a slow moving stock, but it started off as a hedge, but right now I'm actually net short on this market. Originally I got it in at 161. It's trading at 158.66. So that puts me at about 1.5% in gains. And then Netflix, and this is probably one of the more frustrating stocks that you can possibly trade on the stock market. I actually just got out of this not too long ago, and since then it's rebounded. I was long on Netflix when it broke out above it, and then it started selling off. And while the market was selling off, it creeps below. I'll show you here. This 96.90 level was kind of like the do not cross level for me on Netflix. And it did that, so I went ahead and booked the small amount of gains that I had on this trade, which was about 0.3%, not much. But when it starts creeping down like that, I don't have much of a desire to hold on to it. So yeah, when it crossed that 96.90 level, I got ahead and got out of it. But you can see it's made a quick bounce back up. So when you get out of a stock, and here's the thing, so people can get frustrated at that, saying, "Oh man, I wish I would have held on to Netflix. It came right back." And I feel those. I share those same feelings, okay? But I also know that from a trading standpoint, that I can't let those feelings interfere with what I was doing at the time, based on the knowledge that I had on at the time. That 96.90 was a support level that I had already defined, that, okay, you can't cross that level. And it did, so I had to go ahead and be disciplined and take whatever gains are left and move on to the next trade. And so I did that, and it bounces back. But the thing is when you get out of a stock, you can do whatever you want still. When you're in it, whether you're in it or whether you're not in it, the stock's going to do what it wants. So it doesn't need you to be in it for it to go up, and it's not attacking you personally when it goes up without you being in it. So that's a part of the nature of trading. And so we, as traders, we tend to take that personally when we get out, and then the market or the stock does something to make you feel like you're a fool, or regret getting out of it, or protecting your existing gains. And really for Netflix, we've all seen what Netflix can do. It can go down 2 and 3% in a blink of an eye. You're getting more volatility in this market today than what we have seen over the last 2 months. So that has to be something that you have to account for. And then when you're starting to see this heavy sell-off, something that we haven't seen since the Brexit vote. And when I say sell-off from the highs of the day, in reality, I think we only went like 7 or 8 points down overall on the day. But from the highs to the lows, it was a pretty steep and sudden sell-off, something like that we haven't seen in a while. So Netflix was one of the high beta stocks that you have to take account for and say, okay, I'm not going to just let this one go from being in the green to being in the red. And so that's what I did. So I got out of it. The rest, maybe it holds these gains and keeps going higher. Maybe it hits 99 by the end of the day. I don't know. But anyways, I made a decision. I don't regret it from a risk discipline standpoint. The other trade that I am currently in is Adobe. You can see it's got a nasty doji star, which for me, if it can hold that 5-day moving average, that'll go a long ways in deciding what to do with this before the end of the day. But I would prefer that to be a little bit better of a candle for me to hold it overnight, because it was almost at 103 at one point. I don't have a lot of gains in this one either, about 0.5% right now. And then the trade that I added this morning was SPXU. So this is the one that's done the best so far. I got into SPXU, which is a 3-to-1 ultra short of the S&P 500. I got in right before the S&P tanked. I got in at 23.99. So far, it's trading at like 23.47. So there's a lot of upside here. I mean, if you have to look at the S&P 500 to see what I'm talking about. But look, I mean, we were above the 5, 10, and 20-day moving averages. We busted below that, and if we can break below this 2168, and when I say that, we've already broken below it on an intraday basis, but if we can close below it, I think the next stop you're going to see is probably somewhere around this 2148, basically the lows from August, which is currently at 2147. So if we break those, then I think that you have a strong possibility that the S&P revisits this 2120 level, which would be great, really. I mean, for the market needs to sell off. The market needs to sell off. It needs to cool off. It needs to reevaluate life a little bit, because sitting on these artificial highs here and not being able to go anywhere, it doesn't create a lot of trading opportunities. So a nice washout. I mean, I'd be fine if we went all the way back to break even on the year for the S&P 500. We'd be shorting it along the way, so that wouldn't be a problem for me. But yeah, if we could go back to the 2040 level or even lower, the market needs it. It would benefit from it. So I'm trying to think, what else here do I want to talk about? We talked about the S&P, the Dow. Dow has a little bit different of a chart, not Dow Chemical, but this one here, it's got a double top. So this is a pretty precarious chart for the market right now. It trades, Dow Jones represents 30 different stocks. It's price weighted, so you always got to account for that. But overall, if it breaks through this 18,250 level here, it's going to confirm the double top pattern, and then I mean, it could go a lot further. I mean, we can see another 400 to 500 point drop, which would take it somewhere probably around 17,800 or so. Probably, you got a lot of congestion right in here, so there's a good chance it could find its way right back down into that spot there. And let's see here, the Nasdaq. Nasdaq's breaking below its 20-day moving average. If you look at the bands or the Bollinger Bands, I don't like to say Bollinger Bands. I mean, I respect the guy's work, but every time I say that, I get an email from them saying, hey, you guys need to, mention a trademark on it. So I always just call it the daily bands, because it does the same thing. So on the daily bands, a 20-day moving average represents the middle section of the bands, and it's broken below it. So now it's below the second half, or the bottom. It's in the bottom half of those daily bands. So I think that's a pretty big development there. And then likewise, kind of like on the Dow there, you got a bit of a double top pattern here developing, that if it can break below, I don't know, around 5,200, you should start seeing a little bit more selling perpetuate itself there. And then finally, the Russell, almost at brand new all-time highs today as well. But it's one of the more healthier charts. I don't necessarily think that candle is very healthy that it's exhibiting, but nonetheless, it is trading right at those highs there. And then before it could make new highs, it sold off. Now it's coming back down to the 20-day moving average there. You can see the 20-day moving average has been a little bit of a launch point for it the last 2 times. So if it holds that 20-day moving average, that could be a buying opportunity going forward for some of the small caps. Let's go over some individual names here. One stock that I was watching today, CMI. I mean, it looked like it was going to break out hard and fast. I kind of got close to buying it, but I just held off and decided to go with SPXU instead when I started seeing the tide shift a little bit. I just never got quite comfortable with the rally today. And now you can see it's riding that uptrend there. The market can find some stability, and that one might be a good bounce play there because it's basically a bull flag right off of this trend line here. So you got the upper part of this bull flag here, and then again there. And if it can hold that trend line, great bounce opportunity for next week. Then you also have Cena, and this one was brought up in the share pointer splash zone today. And I mean, phenomenal chart. I think it's pretty much already left the garage, the car's out of the garage on this one, and it's rallying hard, and it's got support all the way down to about 69.75. So if it breaks that, it's going to turn bearish again. But the bull flag breakout's brilliant. It's one of the few bullish charts you're going to find out there today. And let's move on to DFS here. Good looking chart, head and shoulders, inverse head and shoulders pattern, left shoulder, head, right shoulder. And then of course you got this nice consolidation pattern. It's breaking above it today. A lot of the banks, they're moving pretty well today simply because of the bearish or the hawkish comments from the Fed. So these stocks are all rallying. You got Goldman Sachs. That actually is not that up that much, but Citigroup is up slightly, about 0.5%. And then you got JPM. It's just above break even there, but overall pretty good day for the banks, relatively speaking, when you look at it from the market standpoint. Let's go ahead and look at some of the other FANG stocks. We already talked about Netflix, but Facebook is still one worth looking at. I keep getting asked about this one a lot because I think people want to see if they can get into it and maybe ride it up to like the 130s again or beyond. But the problem with Facebook is that it's just dead. It doesn't mean that the company's dead or anything like that. I'm just saying that the chart has lost all signs of life to it. It's since late July, basically, this thing has just been trading sideways. It hasn't gone up, hasn't gone down. There's just not much opportunity. I tried to trade it off of this bounce here, and it didn't do anything there. So I don't see much reason to be buying it at this point. Amazon, it's I don't know. I have a hard time finding anything good out of this one too. I mean, you could almost make the case that it's trying to form a head and shoulders pattern there, with this being the left shoulder, the head, and then this right shoulder. But this price action today is a little bit weird and confusing. So I really would say just stay away from it. I wouldn't trade it at all. And then finally, Google. You got this big gap. So this is one of my top short setups right now that I'm watching that I think could provide traders with some more opportunity going forward. I'm going to keep a close eye on it. It's got support around that 790 area. If it fills the gap, that's going to make for a nice trade. So I think there's about $20 to $25 worth of downside to Google that I think you can capitalize on. I would just basically put my stop loss near or at the all-time highs or just a little bit above it. So that's going to do it for today. If you guys have any questions, feel free to email me, ryan@sharepointer.com, or just hit me up in the Share Pointer Splash Zone. It's a free 7-day trial, so you can see if you like it or not. If you do like it, then stick around and get all my real-time swing trade setups directly to your phone, to your email, or live in the chat room. All of it's live, actually. So however you want to use that service, it's up to you. But you can also auto trade all of my stock picks. So if you want to use something like global auto trading or e-option, that opportunity there is there for you to utilize. So thank you all for joining in. If you guys have any questions, again, ryan@sharepointer.com. And you guys have a great weekend, and God bless.